Welcome back to the Paperstac podcast. My name is Rick Allen. This is my co-host Brett Burky. How we doing today, buddy?
Good. Yeah. Wonderful.
Yeah.
Grand. Mm-hmm.
Good, great, grand. It's that time of the year.
I know.
It's the Christmas season.
Yes.
Christmas shopping done?
Yeah. It's ironically we have way too many presents because I didn't know my wife was going shopping for the kids as well, and so.
Whoa! Wait a minute. You do shopping for your kids also?
I mean, when I find something cool.
That's awesome. That's good.
Do you?
Yeah, I mean, sure.
I mean, I like buying cool stuff, and then, it's buying fun things for, like my brother, he likes to, it's weird on like Saturday afternoons, he likes to crank his tunes and have a couple beers in the shower, and he calls it a power shower, and he rocks out, and because he's got young kids, so this is the only way he can escape and be by himself, and so I saw it. I was like, "That's totally him."
What is it?
It's like something you can put on the wall, and you can just place your beer in. It's like a koozie inside the shower. And I was like, "Oh my god, that's so."
Each his own. That's good.
That's for him. And then
you're a good gift giver. You're like, "Oh, he would love doing this." That's perfect.
Well, I usually, and this sounds really nerdy, but throughout the year when people say, "Oh man, that's so awesome," I want to get that. I have a folder in Evernote, and I have it on each person, and in those I have where I'll say, I hear what they say, and I'm like, I'll write it down, and I'll just put it in there, because by the time it comes to Christmas time, I'm like, I don't know what the hell to get for anybody, but then I just go look in that folder, and I'm like, yeah, he did say that, I'm gonna go get him that, and so.
That's a good idea.
Yeah.
That's a great idea.
Yeah, I know for my dad, he loves a certain musician, and so I bought him tickets, and we went to go watch him play. So I mean, the guy won't be back forever.
My wife and my son are really good gift givers. My wife is really good. She hears and listens and like little stuff, and I'm like, when did you?
Oh, you remember that? Yeah.
Yeah, and so, I'm not.
No,
I'm not. I'm terrible.
I know. You should see the gift I got you.
Anyways, there it is.
There it is. All right, so today what we're going to get into is learning how to do.
So it's interesting. I'm helping somebody with a house, and basically what it is, it's seller financing. It's really talking directly to real estate agents, real estate brokers, and there's a powerful tool. And most people know about the owner finance side, and they're like, oh yeah, you can owner finance it. They have this high level generic understanding of, okay, I get it. Instead of selling it for cash or to a loan, they're going to go ahead and they're going to hold paper on it and do that.
Right.
So it came about because I'm helping somebody get a house, and we're sitting there talking with this real estate agent who's a broker also, who's been in the business for 35 years.
Oh, wow.
A long time. I mean, she's a seasoned veteran here in Central Florida. I actually, whenever I owned a wholesale company, I bought a lot of property from her, a lot of REOs and stuff. And we were talking, and she's like, are you doing those subject twos or this or that? And she said, banks are calling them due. We were just talking shop. And she's like, the assumable, I was like, well, you can do assumables. And she was like, yeah, but you got to come with this, the seller's got to be able to hold a second position mortgage on that for them, and just talking shop. And she's like, there's just not a marketplace for it. And I was like, she's like, well, at least not. I go, what? I think there is. She's like, well, I don't know about it. And I'm like, well, it's right here. And it was interesting talking to her about it because she had no idea.
Right.
Paperstac. And so I was like, yeah, no, we've got Paperstac. This is what we do. This is why we created it. It is exactly what that is. It's a secondary marketplace. People can buy and sell debt on there. And all of a sudden, she goes, well, I need to learn more about this because I've got this duplex that my seller would consider doing it. He just doesn't want to get stuck.
Oh, with the seller finance paper.
With the seller finance paper. And I didn't know there was a marketplace out there to literally go sell this stuff.
Ah.
So this is kind of like an introductory, hey, for real estate agents, real estate brokers, seller finance, let's dive into it, high level, get an idea of what it is, what it means, what's out there, and that because people don't really know the ins and outs of it, but they certainly don't know about the marketplace. And so it becomes much more of an intriguing option for tax advantage reasons. I'm not an accountant. You go talk to your own accountant. But there's a lot of benefits to it as markets soften, real estate markets, it's another tool in the belt to help your clients who can do it. And it's not every deal. Like, let's make that up front. It's not every deal you're going to be able to do this with. But there's some times when people are like, so I don't need the money, but I can take this. There's some tax advantages here, and I can go ahead and collect interest on my money. I just turn it into interest, right? So I guess at a high level, what's owner financing, seller financing? Basically, it's the seller is going to become the bank. Maybe you've got a potential buyer for your property, and they come to you and say, would you consider owner finance? Most time agents are like, probably not, but maybe they do. So seller or the buyer puts down some money, seller becomes the bank. You hold this paper. Now you're collecting interest on whatever the principal amount of the loan is. So high level, that's what the owner finance is. Probably for people who are usually tuning into our podcast, they're like, yeah, I get it, buddy. I get it.
This is not a new one for them.
This is not probably necessarily for you. You can tune in. There's there's a lot into this, but this might not be for you. This is more so for real estate agents.
I also got to remember where some of this came about too, was being at, where were we at? Was the 5-star? Where it's all real estate agents.
Right.
And this concept was like new to them. Like, it was like a brand new, like, it's kind of weird when you're in the bubble. You hear it all the time. You're like, yeah, doesn't everyone know this? And then you go to the 5-star where it's all real estate agents, and they're like, they don't know it.
No, they don't, which was interesting. So, like, let's look at the first case. When is it a good fit?
When you own it outright?
Own it outright. There it is. You've been learning. You've been studying up.
Paid attention.
Yeah. When there's not a mortgage on the property, you own it outright. You're like, hey, look, I own this free and clear. I can kind of do with it what I want. I don't owe money to anybody on it. The second thing is, you don't need the money right away. Right?
Makes sense, yeah.
If you don't need the money right away and you're like, where am I going to put the proceeds from this? So
you have to do a 1031 exchange.
You could do a 1031 exchange, of course.
If you didn't want to.
But if you didn't want to, and you're looking for like, hey, look, I want to sell it quickly, but I don't necessarily need the money. That's a good. Sometimes people are like, look, I got to get this off the books by the end of the year, something like that. Seller financing, great option. You can sell it quickly and then kind of defer some capital gains, stuff like that, or avoid them altogether. The next thing is when maybe you have a buyer who wouldn't qualify for bank financing.
Oh yeah, that's true. I didn't think about that one.
But they have some money to put down. Now let me be clear on this. Just because a buyer doesn't qualify for bank financing doesn't necessarily mean that they don't have a good credit score and they don't have money to put down.
Yes. Ideally, that could be somebody who's an entrepreneur who's only had the thing going for a couple of years, writes a whole bunch of it off, and it looks like he doesn't make that much money on paper.
Right. Or there's like anybody doing the rental game or the Airbnb game.
Yeah.
I sold a property. I had it listed on the MLS. I sold it to a lady who, we had to get her qualified and everything to make sure that, like, look, I got to at least see that you can make the payments on this stuff, right? You don't want to write a bad loan, but she had like a 730 credit score. She had 30 or 40 grand to put down. I'm like, on a $230,000 house, I'm like, done.
Yeah.
I think it was 30 grand on a $230,000. She had 30 grand.
Yeah.
So I was like, yeah, I'll write a loan, $200,000 loan. And I could see through the financials. I could read the tea leaves. I could understand. I get it. She's not going to go to a bank because they shelter their income. Try to pay as little tax. So those are the three real reasons there. It's like, look, one, these are the properties you would do it with. No loan, no mortgage, right? So it's free and clear. You can sell it. You want to sell it quickly but you don't need the cash. Or maybe you've got a buyer who doesn't qualify. But if you get into it, maybe they've got some money to put down. So some of the benefits to doing it are, one, there's some tax advantages. You can go talk to your accountant with this. Two, it opens up your buyer pool. This is really good in a softening market. It just expands the buyer pool of people, maybe self-employed people, or maybe there's people who don't have perfect credit, or maybe there's somebody who just doesn't want the hassle of going through a bank. I know I bought an owner financed loan. I think it was like 60 grand was the principal balance. I ended up paying like 35 grand for it. And the guy, I had the loan for like 8 months. I bought it maybe 3 or 4 months after it was originated. and the guy ended up writing and stroking a check to just pay it off. Guy had like an 800 credit score. He owned his own concrete masonry company.
He made good money.
And he was just buying it for his kid. And he goes, I didn't want to ding my, I didn't want you to go run a bunch of credit stuff or do this or do that. I didn't want to deal with the hassles of the bank. Just the owner financing was the play. I'll pay the 12%. I'm going to pay it off in a year. No prepayment penalty.
So you bought the note, and then he paid it off like immediately after?
He paid it off. It was probably like 6 months later he paid it off. And I'm like, this guy just paid this note off. I bought it at a discount, so I was good.
Yeah.
But I looked at it and I'm like, I went back and went through the origination docs again, and I looked at it. I was like, oh yeah, this guy, that's right. I remember. He made $400,000 a year.
Yeah.
I was like, okay, all right.
60,000.
So it just goes to show you, it's like, look, there's people out there who will utilize owner financing who are more than qualified to go to a bank, but they'll just do that. It can improve or increase your sales process. It moves it right along. You can, if you find a buyer right away, it's, hey, great, I got a buyer. You don't have to wait. You're not having to wait for a bank. That same deal I'm talking about where I, this was like, oh, okay, some brokers need to know about this. This deal is going on for a while now because of bank stuff, and this is a little bit of a different type of deal because there's like it's not a fix and flip loan, but it's a construction loan. It's a construction loan. They're doing rehab to the property, but it can expedite things certainly. I
don't know, one thing I know you might not have talked about it, but when I look for stuff like this online and different websites, biz buy sell, just looking around or stuff, owner finance is actually the search terms I use.
Yeah.
Because then you can know, as an investor, you look at it and go, oh, they offer financing on this thing. You're not in it for a whole big, bunch of mess. You can You can get in, and it's a lower investment amount, and a lot of times you can get the money to cover the actual, if there is a down payment based off whatever the needs are of the person that's selling it. As long as you listen to their story, why are you selling, how much money do you need, and if you can figure out something creative.
And this is targeted towards real estate agents, real estate brokers. That would be on them to kind of, know the story. You don't want to diverge too much. But also what this does is it allows you to command a premium for your property.
That's true.
A lot of times you can actually sell this if they've got a healthy down payment. You may be able to sell this 10% higher than you normally would. Just because it's like, look, yeah, I'm offering owner financing. You're going to pay a premium to do that. So there's some definite like benefits to doing this. So so let's say this. So you decide you've talked to the biggest part about it is educating the seller.
Right. Yeah.
Right, because you have to educate them, and typically I would talk about this. Yeah, we'll talk about it now, but you want to know, like, great, I do owner financing. I do this. I find a buyer. They're qualified. I'm collecting a good interest rate. What if I want to get out of it? What do you do with it? Well, there's actually marketplaces out there like Paperstac that will allow you to go put this up there. Think of Paperstac as just like the MLS and a title company, sort of, in that we handle the closing. We generate closing docs, generate purchase sale agreements for the loans, generate the transfer documents, the assignment of mortgage, the note. So that's out there. It's like kind of a one-stop shop for people to buy and sell debt. So let's do this. You've educated your buyer on this, right? Right, yeah. The next thing you want to do is if you educated your seller, the next thing you do, you find a buyer that you want to work with. Well, what do? Well, you got to have a process in place of qualifying this buyer, right? And I always recommend that you originate a loan with a loan originator, an RMLO, residential licensed mortgage originator.
Is that what it is?
Yeah, you didn't know?
Right, I thought it was registered mortgage loan officer. I don't know. I never actually had. I just guessed,
I think that's what it is. Registered mortgage. I don't know what it is. RMLO. Anyways, there are people out there who this is what they do. They're licensed to originate these loans.
Yeah. Call the underwriter.
Call the underwriter is a good one.
Dan Deppen owns it now.
There's a list of them out there that, if you're interested, leave something in the comments. We can get you some of those companies out there. I think Call the Underwriter just won best originator by the
best of notes.
The best of notes. Another thing you want to do. So you've got a buyer. You've found somebody that's going to do it. Now a benefit is you can charge a pretty healthy interest rate. Interest rates were low, and I was charging 9.5%. When interest rates were 4 and 5, I'm charging 9.5% because I'm I'm giving somebody the opportunity at home ownership. And a lot of times what you want to do is you can kind of back into either your sales price or your interest rate based on what it costs to rent in the area, right? Mm-hmm. So if the rental in the area is $2,200 and you can offer somebody a principal and interest loan payment that's comparable or slightly under to account for taxes and insurance, it's a great opportunity to allow somebody to own as opposed to rent. And you're doing some philanthropic stuff here by giving home ownership opportunities to people who might not already have that opportunity available to them.
That's very true, especially when we're talking about the I-10 stuff.
Mm-hmm. Yeah. So you got your buyer, your sellers agreed to it, you've got an RMLO, you run through the qualification process. The nice thing about most of the RMLOs out there is they'll assist you in that, right? Because the last thing you want to do, you don't want to write a loan where it's like, look, they make $8,000 a month income, and you've got a $4,700 a month payment. You don't want them to do that. You want to set up a loan for success. Once you do that, you're going to want to set up loan servicing, and that's somebody who, think of it as like a property manager. There's companies out there that will step in, that you board the loan with them, and then the borrower makes the payments directly to
the
servicer. And then the servicer takes their small fee, usually $35, something like that, $25, and then they send you the rest, which is good. But they keep you in compliance, they send out notices, everything along those lines. If you're not going to do that, something to consider is it takes some pretty good bookkeeping, and you got to have an amortization schedule and all that stuff if you're going to try to service the loan yourself. I recommend just
don't do it.
I don't recommend doing it. So if you charge a good interest rate, collect the money, it's well worth it to have bail box money coming in and not have to.
Servicing yourself sounds like a nightmare.
It is a nightmare. So you want to also then look at, okay, how long do I keep it for? The nice thing about a mortgage is it's usually front end loaded with interest. So you can go ahead and keep that mortgage and keep collecting payments for 12, 24, 36 months, and really the principal
doesn't go anywhere.
It's not going to go down much in that first 3 to 5 years.
Which is kind of depressing as a homeowner.
It is, but it allows you to collect that interest.
Right.
Maybe you're waiting for a more tax advantage, when it's more tax advantageous to you to sell it or liquidate it, and then at that point you can say, okay, now I'm ready to do it. Mm-hmm. I'm ready to go ahead and sell this mortgage. You can use loan brokers, you can use Paperstac. There's a lot of options out there to do it. The easiest is going to, hands down, be Paperstac. Just because, obviously, we love the platform, but because look, there's buyers there. There's well over 17,000 users on the platform now. You put it up there, you listen, or you wait. Our new platform, you can be able to set it up as an auction, a timed auction. You have people bidding on it, and you get to decide, okay, am I going to have? You start looking at your offers and see how long you want to sell it.
Yeah.
Or see what you want to sell it for. If you're holding it for 24, 36 months, and you've got a buyer who's paying on time, great.
Yeah, that's great.
Yeah.
That also shows the person that would be buying it, this person pays on time.
Yeah, well, it's seasoning.
It's seasoned because the person who would be potentially buying it, at least 3 months is what you want to hold it for. Otherwise, people are going to ask for bigger discounts.
Yeah, and really what will happen is, you talk to, okay, so for brokers, you're probably thinking, well, how am I getting paid here? Well, you're getting paid out of the down payment just like anything, right? If you're collecting your interest and or collecting your commission just like you would. This allows you to also then, as a broker or an agent, you can start building up a pool of owner finance buyers, right? Maybe you've got a couple investors as clients who have larger rental portfolios and they want to start offloading stuff. And you say, look, let's look at, if you're interested, you can start doing the owner finance play.
Yep.
And what that does is then, if you start building a book of owner finance buyers, and you've got a client who's got 20 or 30 rentals, or a couple clients that total you out at 100 rentals, right? Then you can start transitioning those clients from rentals or those sellers who are thinking about just selling their rentals or being landlords, and to like, look, have you ever considered being a lien lord or considered becoming the bank? No toilets to fix, no roofs to fix, no plumbing issues. AC goes out, I'm the bank. I've sold this to you, that's your problem now. You still owe me the money.
Yeah, we just did that. Remember the guy at the gym, he's owned those rentals since the 90s or a long time and didn't even consider it.
I hadn't even considered it. There's so many people out there who have rental portfolios that like the cash flow, because honestly, everybody, you want to have cash flow. To where now you can take this and start selling this when the market's high. It's great to do it, right? Market's high, sell it, lock in an interest rate. Yeah,
smart. Especially, I mean, a lot of people in Florida with the rental, they got hammered. I have a buddy who owns a bunch of stuff along the coast. Cameron, his stuff got messed up during the last hurricanes, and he's had to repair it all. He's losing money. But
of course he's losing money. But as the bank, you're insured.
You're insured, yeah.
You're insured. So so you're listed as an additional insured on the insurance policy. So there's a lot of benefits to it. Again, not every deal is perfect for it.
But it's nice to have another tool in the toolbox.
So I think that's kind of the high level.
No, that was good. I mean, because the other questions that could be asked are just going to be specific to certain parts of what you said. So I mean, if you're an agent out there or broker, you're wanting to learn about this stuff, reach out to us. Leave a comment. We're actually going to be teaching something, or he's going to be teaching it probably in the new year. For something for agents, I forget what it's called. Might be something to look at there.
Yeah, I'm gonna put together a course. I've already kind of got the outline and done, where it's just, hey, look, jump in, learn the owner finance side, how to talk to your sellers, really run through a step-by-step, a playbook on really how to do it.
It makes sense.
Yeah.
I mean, it's a great opportunity for a lot of agents out there.
Yep. So.
Well, cool. Well, this is the last one I think for the year, unless you want to come in next Thursday or Wednesday.
Won't be here
Christmas.
Wednesday.
I'm joking.
Thursday I'm leaving Christmas Day for my hunting camp after we do the presents. I come back on Sunday, I'll be in the office Monday, Tuesday, and then I leave the 2nd to go skiing in Keystone. So
well, Happy New Year, Merry Christmas.
we have to do one because
yeah, okay.
We'll try to get another one out before then.
But if you have an episode you'd like us to cover, some questions you have that are specific to note investing, or if you want to have a follow-up with something that Rick just talked about, be sure to leave a comment and we'll be happy to make a video for you. So I guess that's it for this episode, and we'll see you on the next one. Thanks.
Bye.